Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the Nasdaq 100, the Qs this week. Check in and see how they are doing. We're going to take a look at a couple of our indicators, look at the interest rate picture, and then check on the biggest S&P sector mover this last week, a holiday shortened week, and the volume was actually a lot lower also. So we're going to start off here with the side-by-side view. The industrials, the S&P and the Nasdaq 100. The Dow was up 443 points for a fourth week in a row. Pretty strong little counter trend move that we've got here. The S&P 500 up 45.32. Neither one of those have punched to new highs, but the Nasdaq 100 did, up 144 points. And you could see after doing that, it backed off a little bit. But this moving above this high, the July high, has caused me to change the move to the alternate count that I was talking about. And we're going to talk about that here in just a second. Let's take a look at the side-by-side of the Dow and the transport. So here's that 443-point move. Transport's up 162 points. Now, the interesting thing, we've had, it's a 4-week stretch in here. 3 out of 4 weeks were up, but this last week did not take out the prior week high. So it's almost like a little bit of a pause. We've actually pulled back above this trend line more than I thought we would. And it's going to be interesting to see where do we go now that we've kind of paused, couldn't take out the prior week high, and we're just slightly above that trend line. So that is the picture we got on the transports. Similar type picture to the Dow, but a little bit different. Not nearly getting a pullback to the degree that we had on the Dow Industrials. Okay, let's take a look at the Qs. So the Qs were down 55 cents on Friday. That little, 3.5-hour session that we got, you could see how the volume dropped off dramatically. The volume has been dropping off actually since November 14th. So this whole little push that we've had in here has had a volume drop-off occurring at the same time that it continued to push higher. For the week, up 3.47 points. Now, I have moved to this count because I was watching this 90% level. What am I talking about? I said, well, if this move retraces 90% of this move here, which you could count as a 3-wave move for A, primary wave A, well, then I'm going to label this as B because to be a B wave, you have to retrace a minimum of 90% of A as a part of a flat, okay, an A, B, C flat. Now, the unknown is you don't know how far the B wave's really going to push. It can push up to the beginning of wave A, or it can go beyond the beginning of wave A. But right now, we're just going to take it one wave count at a time. And so we pushed to this level. We actually got within 19 cents of it. That's enough of a retracement for me to be able to say, yeah, we got there. Okay, so the Fibonacci levels I'm talking about here is C versus A. I'm talking about the zigzag within the Y wave, WXY, combined zigzag pattern, complex zigzag corrective pattern. And so I'm looking right in here and saying, okay, the relationship of C versus A right here is 61.8%. If we continue to push higher, 405.87, okay? And then up here, C would equal A at 445. The prior high back in November of 21, 408.71, intra-day high, or intra-week high, actually. So this is the weekly view. So this is the weekly view that we've got. This is the Elliott Wave count that I've got as my preferred count. You can see we've basically gone just straight up. Very minimal corrective moves. So I mean, yeah, you could count this as a zigzag, but we haven't got much of a zag as a part of this move. Big old gap here, breakaway, runaway, could be exhaustion. We'll see volume dropping off. That's the picture we've got on the Qs. And we just go back to the moving average view. I'm going to take a look at a couple of indicators. And now, I'm going to look at the one that's basically telling us that no fear reigns, and that is the VIX, the fear indicator, right? So here's the daily, down 39 cents on Friday. Lowest close at 12.46 of the year. And this is actually the lowest weekly close since the week of January 12th, 2020. Now, you remember January 2020, right? That was right before the whole pandemic crisis and eruption and sell-off that occurred February, March of 2020. So here we are down here at 12.46. You got to go all the way back here to the week of January 12th to have a close of 12.10. So we're down in the basement. Basically, the market's saying, they're saying there's no fear at all. Well, that usually, it's what you get when you get near the top, when everybody thinks everything is going to go higher. We'll see how much further we got to go. So another indicator that I look at on a daily basis is over here on the percent of stocks above their 50-day moving average in the S&P 500. Percent of stocks above the 50-day. We're sitting at 75.5%. So I look back over here and said, okay, in the last 2 years, every time we got to the level of 75.5%, how long did it take before we actually peaked? Okay, well, it's really interesting. There's been 5 other times in the last 2 years. And I'm looking back at my notes here. One of those times, January 4th of 2022, that was it. We didn't get another day higher. I mean, it just, January 4th, it peaked right at around 75.5. 4 other times, you got another 13 to 14 trading days before you got the peak. So either we're there or we're 2 to 3 weeks maybe away from the peak. So we're getting close. It will be interesting to see how soon does the price action start to roll over with a vengeance. Okay, so that is the picture we've got on that indicator. Now let's take a look at the interest rate picture. So I'm going to start this off by pulling up the high yield bond fund, HYG. So it didn't move much on Friday, down 8 cents. And then here's the weekly view, up 23 cents. The interesting thing is that we've pulled back up into this zone of, this should provide a significant amount of resistance. But so far, we've continued to push up into it. You can see on the daily in here, we basically did a lot of oscillations from, the end of March through basically the end of September. And now we've pulled right back up into it. We seem to be pushing, but just like on some of these index ETFs, the volume's been dropping off in here, getting a little bit of divergence on the RSI. So we'll see what happens. See how much further we've got before this starts to roll over and break down. That is the picture there. When I take a look at TLT, it was down $1.07 on Friday. And this is what I'm looking at right here. Down 24 cents on the week. I continue to look at this count, and I think that based on this picture, I think we've got one more move to the downside here to finish off this 5th intermediate wave. I mean, that's the way I'm counting it. This has been a little bit of a struggle, but this looks awful wedgy in terms of the way it's pushed over the last week and a half to 2 weeks in here. And look at the volume drop off. That's pretty dramatic. Okay, so we'll see if this is going to start to sell off again and do one more push to the downside. And if that's the case, then we're going to be looking at 10-year yields that may be rising a little bit. Well, what's been going on with the 10-year yield? We're sitting at 4.47%. It popped up a little bit on Friday. Okay, so this is the picture on the pullback on the 10-year yield. But the interesting thing is, look at this gap that occurred back over here. When was it created? It was created on September 21st. Well, by my measure, the top of the gap close is right here. The high is 4.36%. Okay. Where was the low on Thursday or Wednesday actually? Was this? Yeah, it's Wednesday. Okay, on TNX. The low, 4.36%, exactly. So we got a perfect gap close. And when you look at the weekly chart right in here, where do we pull back into? Right back into what should be support, which was the prior high at 4.33. So we'll see if this holds. We're right in that zone where it could very well be that we're going to get some support in here. We're going to start to push higher. TLT drops back, one more push, and we do another push up in here. Well, and here's a pretty good little gap. Just eyeballing this, as a target to come up. So we'll see what happens. That's the picture on the 10-year yield. Let's take a look at the dollar index. Okay, so right here, there we go. So dollar index was down 0.517 on Friday, and pretty much that accounted for almost all of the move on the week, 0.514 on the week. So the picture I've got on the dollar index is this. It looks to me like we've pulled back in a wave 2. I am looking for this dollar index to continue push. This is just a path forward. Don't say Joe's projecting XYZ here on 3 and 4. This is just a path forward. Right now, I'm just focused on, do we have the end of wave 2? Okay, and when I look at the daily, in terms of what we have in here, here's where I first targeted support at 104.41. Well, we kind of broke down through that as we were getting our 5 waves for wave C. 1, 2, 3, 4, 5. Okay, and then now we approach the second level of support at 103.01. We almost got there. And here's the retracement levels of 2 versus 1. Okay, and so we're in that zone, that kind of reversal zone in here. I think we're getting ready. We'll watch and see. Do we get a push higher here now on the dollar index? Okay, that's the picture there. Let's take a look at the biggest sector mover in the S&P 500 this last week. Of the S&P sectors, the 11 of them, 2, 4, 6, 8, actually, 10, 11, the 11 S&P sectors in here, up 2.25% on healthcare. So this is continuing to push. Now, the interesting thing is this making a run to the highs up here, and I'm talking about, up around 136 or so. When you look at the weekly view, this has done nothing but oscillate sideways since the peak that was put in right here in April of 22. Okay, so down in here, this low, June of 22, and then back up to this peak here in December of 22. And then it's like we're just coiling, okay, like we're coiling. So now it's going to be real interesting to see. Strong move for the week. Has it got legs? Is it going to take out these prior highs? The first one is July 23rd, the high 136.85. It's going to be real interesting to see, does it take that out? And, yes, you can draw a trend line across the top of that. And I would say if it breaks that trend line, especially on a close, it's probably going to pop. It's probably going to go. Okay, so that was the interesting movement. And that was literally the biggest mover of the week on a holiday shortened week. I mean, you got to go back to 1.3% for the next, something like that, 1.36 for the next biggest mover. And that wasn't a whole lot. Okay. That's the picture of this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.